Welcome back to Investing and Trading Live, sponsored by TradingAcademy.com. My name is Josh Lilquist with my good friend and my good pal, Mr. Al Conix. And if you're just tuning in, we were covering some different techniques and concepts as these markets have been dropping, the type of people that are coming to these investing classes and looking to utilize their time for their benefit, for their financial future. If you missed seats for that investing class, make sure to text the word investing to the number 210-210, or simply go to OTAMIN.com. That's OTAMINN.com and register for a free investing class to get some more insight on this drop in the market that we're seeing right now. It's down about 10% since July roughly. And, quite frankly, it's in a daily downtrend. So what does that tell you? Well, we're going to talk about that coming up here, some of the opportunities as these markets do continue to drop. But it could go back up. Nobody has a crystal ball. That's why in that last segment, Al was talking about protecting your positions, protecting your 401k, protecting your IRA. That way you don't have to be stuck to losing money as the market drops, because that's the only option if you just let it sit in there. Make sure to subscribe and like the podcast wherever you listen to podcasts. That's Investing and Trading Live on Apple Podcasts, iHeartRadio, and Spotify. We do a segment every single day on a market update to give you the insights, the do's and don'ts of the financial markets. So that being said, Al, I ended that last segment about how I was teaching a class this past weekend. And it was a 2-day class, and we were going through all the different opportunities in the markets. And we got into the topic of following the news and how that impacts your investment decisions. Because we were talking about, this market is dropping. There's great opportunities with options to profit on the market downside. There's strategies for that. Obviously, there's inverse ETFs. You can short stocks. There's opportunities to buy non-correlated, say, futures contracts or even currencies. And then we got into the discussion of, okay, well, the news said yesterday that the market is resilient and it's going to go back up tomorrow. And I said, okay, well, why might you be seeing that? It's not always about the news, it's about the clues. And a lot of times what you see is quite frankly, we're getting the news late anyway. The news is actually stuff that's already happened. So I said, well, do you think institutions know this stuff before us? And quite frankly, they said, well, yeah, it's obvious, because the stat is 80 to 90% of the activity is done by the institutions of the market.
That's correct.
So when we cover how that works, but they actually move financial markets as the big institutions, the banks, the Goldman Sachs, the Buffetts of the world, because they're buying millions and billions of shares, millions of shares sometimes on certain stocks. So that drives price either up or down, which creates supply and demand. And that's how we trade and invest here at the Academy. If there's more demand for something, price will go up. If there's more supply for something, price will go down. So going back to the news, they said, well, it's going to go back up. Okay, well, that is now your opinion. And I said, okay, great. Does the opinion of that you have, is that going to drive price? They said, well, no. And then we talked about it a little further. Well, we talked about earlier, what drives price? Institutional order flow, buyers and sellers in the market, which is supply and demand. And they said, okay, that's why you have this core strategy, which is designed to follow the institutions, to follow what they're doing, and then you wrap around proper capital management, protecting your positions, and that's what you talked about in that first segment. But in this segment, I want you to go a little deeper on why it's so important to have proper capital management on every investment that you have, not just buy something with the hope of something to work.
Yeah, what most people do, I think, especially in their retirement accounts, is basically put something on cruise control. They'll put together or have somebody help them put together a portfolio, and then they just let it ride, and hope is a big part of their strategy. Mm-hmm. Well, you mentioned the news and how people react to that and who actually moves the price of something. If the institutions, the Wall Street players, if they are buying something or selling something, why are they doing that? They're doing that because they know something, and they know that before the public does. So when the news comes out, when you listen to something on CNBC or maybe you read something in a publication, that's old news by the time it gets to you. The institutions, the Wall Street firms out there, they pay billions of dollars a year for data and research that they get long before we get it, or we don't get it at all.
Yeah, and that's the difference between the educated and uneducated. People think that, I'm just going to go analyze a stock with no education, and that's what their job is to do.
Exactly, and that's what Wall Street tells you, to look at the fundamentals, analyze something before you buy it. Well, they've already done that. They've done that long before you have, and by the time you make a decision to take a position, whether you're going long or short, in other words, whether you're buying or selling, they probably already have done that, and they're getting ready to do the opposite of what you do. You mentioned that 80 to 90% of the activity is institutional activity. That is true. They control 80 to 90% of the market. And who do they have to have on the other side of a trade from them? Somebody who's losing. And that leaves the public to be that 80 or 90%.
That's interesting you said that, because if an institution wants to let's just say buy something, they have to convince somebody else to sell it to them.
Yeah, it's part of the manipulation that goes on in the market, and we know that happens. It doesn't sound like it's fair or is right, and it probably isn't, but it happens. You have to deal with reality. So what if there was a way, though, to identify actually when the institutions were being active, not waiting until the news comes out and then you base your opinion on that? If the institutions, if they feel something is of value, they're going to buy it, and only at a certain level, a certain price. Once it exceeds that price, then they hold off. They have patience to wait until the price comes back down there again. But when they're buying something, they buy because they know it is a value. When they sell, typically it's because something is overvalued. So the only way you can really benefit in these markets, especially today with how volatile they are, how quickly they move, especially with the algo systems out there, you have to be prepared. You have to be in a trade or ready to get out of it before the institutions actually make that move. Sounds kind of like a crystal ball, but in a way that's what we do. We're showing you in advance what the institutions are going to do. We can't really go into full detail in a 2-hour show, but we will go into detail in these classes that Josh mentioned. And here's the important thing. People want to know, what's the secret to success as a trader? Yeah, the secret, if you want to call it that, to success is knowing when it's the right time to buy something or the right time to sell something. And knowing that is more important than actually what you're buying or selling. So instead of looking at a company as the most important thing, it's the time to buy or sell that's more important. And that's what our core strategy does. That's what we teach you. Don't worry about not knowing these things, but the one thing that you want to make sure that you eliminate as much as possible is your opinion and your emotions getting involved in making decisions. And one of the things that we do with our students, and as part of our core strategy, we show you how we have you be active based on a set of rules, a step-by-step process based on a set of rules that does exactly what I mentioned. It shows you where to identify where the big players, and when I'm talking about big players, I'm talking about people that can invest billions of dollars in one position, enough to cause movement. That's what you want to do. You want to follow what those big players are doing when they begin to do it, not waiting until after the news comes out, after the move has already taken place. If you're in a position, especially where you want to catch up on maybe some losses that you had, you're not going to be able to do it using the typical strategy that Wall Street has you do.
Yep, exactly.
Mutual funds, just buying and holding on to something. It hasn't been working. It's not going to work. We may go through another decade where we have a market where you're going to have to be able to be more active as a trader investor. And that doesn't mean you're sitting in front of a computer all the time doing it.
Correct, yeah. So one of the cool things, you were just talking about a few things there, legendary investor and fund manager Peter Lynch actually has a quote that he said out there, and I don't know the exact quote, but the summarizing it says, the average investor actually has an edge over the institutions because we can essentially get into our positions, get out of positions instantly. Mm-hmm. They cannot, and that's the benefit that we have, and that's why we're talking about supply and demand, because that's the strategy that we have is to supply. And when there's more demand, price goes up. That's where we want to be buyers. Where there's more supply, that's where there's more sellers. We're identifying that, and that's where we want to sell is with those institutions because we can't beat them. So as we're getting into these different concepts, the concept is actually pretty simple. It's just you need a strategy that's designed for that, and that's our core strategy that we teach here at the Academy. If you want to learn more about that strategy, you can simply come into one of these investing classes. We go through these different opportunities of the market, what the supply and demand actually looks like on a price chart, because that's telling you exactly what's happening. So you can simply go to otamin.com to come into one of these investing classes. That's otaminn.com. We have these classes in Edina. We have them at our academy right here in Bloomington. We have them in Plymouth, Shorewood. We have them all across the metro to make it easy for you. So simply go to otaminn.com. That's otaminn.com. Or simply text the word investing to the number 210 for 2 seats. So with that edge that we have as a retail investor, there are different assets that the institutions are always trading, and they tell the public to go buy and sell stocks.
Correct.
Now there are other assets that are out there that they call them fixed income assets. If you think about it, fixed income, which means they're getting an income off of it, and they tell the public to do something totally different. So you have futures, and you have Forex, even options, but let's talk about futures and Forex real quick, because there are opportunities to have an edge in those markets once you understand core strategy, which is supply and demand at its finest. How do you actually wrap around proper capital management on those positions so you can keep them safe in about a minute and a half?
Well, a part of it is that risk management part of it. You have to know. But I think the biggest mistake that people make, regardless of what they're trading, is they don't know how to lose and they don't know how to win. And what I mean by that is, if you have a loss, if you're wrong, and you will be at times, make sure that you just have a small loss, because one of the things that a loss should never become is a bigger loss. So learn how to identify where to get out of a position before you even get into it. That's part of management. And then also, what about a profit? One of the things that a winner or profit should never become is a loss. And way too many people invest in a way that they lose their profits. They hold on too long, or they get out too soon. These are all things that we teach you how to do. Is proper management. Most people, as I mentioned earlier, they have a portfolio put together and then they just let it ride and they don't manage it. If you're managing it, you can boost your returns. You have the potential to have better returns. You have the potential to not go through losses when the market goes down, or at least minimize those losses. Back in 2022, when the market was down big, a lot of people were in the S&P 500, in that index. Some of the companies in that index, Amazon was down 51%. Alphabet, Google, down 41%. Microsoft was down 30%. Tesla was down 68%. And Meta Platforms, that's Facebook, was down 66%. And that was a big portion of the holdings that people had. That's why so many people lost money then. What if you had risk strategy on your positions, where instead of having losses like that, you at the very least protected your assets? That would have made a huge difference in how you went through that particular year.
Yep.
Being able to boost the returns of something, how do you do that? I mean, if the stock is providing, say, a 10% increase for a year, how do you boost that? Well, there are assets that you can use in addition to that stock. Options would be one. Maybe instead of having something be up 10%, maybe it's up 100% or 200%. At least let us show you what those opportunities are, how you can benefit from them. Wall Street is not going to teach you how to do that, but that's what we do. We don't have a bias as to what you trade. Our only goal, our only bias is that you're successful at whatever you do.
Yeah, just an example of how the stock market works, and some may know this, some may not. It's just like real estate. You want to sell your home at the highest price possible. You don't want to just hold it and just hope it goes up later or it goes up more at one point. If you want to collect some income on a home, you sell it at the highest price possible. Same thing if you want to be able to buy a home at the lowest price possible. So you don't just hold it forever, especially if you're doing real estate. Mm-hmm. You buy and sell. And that's the same thing as collecting your profits when they're given to you. Yep. And that's actually, if you listen to the podcast, that's how I end every show. Collect your profits when they're given to you and protect your losses, keeping them small. And that's what we do at the Academy, is protect those losses, protect the downside, strategies that will profit on the downside and up, so you have opportunities in all directions. Come into one of these classes that we're talking about and see how the market actually functions, but the options that are opportunities that are there for you. simply go to otamin.com. That's otaminn.com. Or text the word investing to the number 210 for 2 seats for this last. Al, coming up next, I want to talk about income strategies with the markets on what we can do today. This is Josh and Al. We will be right back.